Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, October 7th, and no economic news release is scheduled for today. So, the only thing we really got on the day today is the stock market, which is currently down. The Dow is down quite a bit, over 100 so far this morning, and it's all due to the government shutdown. Now, obviously, we're into about a week here now with the government shutdown, and the concern is obviously the default. So, if we do have a default, it could be pretty bad news, and we could have a pretty big economic crash coming ahead. It would obviously affect the currency markets. It would affect interest rates. It would affect stock market. It would affect a whole lot of things out there that you know. It would make life very uncomfortable and probably prolong our economic recovery for a very long time here. So this is going to be something we really need to kind of get resolved. Hopefully, both parties get together, get this resolved quicker, sooner than later, as the markets are starting to have a little bit more concern as we're kind of approaching the October 17th deadline. So let's kind of jump over to the bond market, see how they're faring. And the bond market here is actually taking advantage of it. So we did start the day above. Remember last week where I said we had these two arrows here kind of getting to a point where it's either going to be squeezing upwards or downwards. Today it started upwards above the trend line. We'll have to wait and see how this plays out, if we're going to be able to stay above it. Currently at 101.91, where we left off at 101.78. So we do have an improvement in the pricing from before, as well as it's still better than what we had on Friday. So good pricing right there. Again, we got to wait and see where this transpires. We do got some important news like retail sales and such coming out tomorrow. We'll have the small business index. Some data would be again, because of the government shutdown, won't be disclosed. Like Friday, we didn't get the jobs numbers that was scheduled for Friday because the government shutdown. So be prepared. We'll have a little bit more volatility, and but as a result, interest rates have shown some improvement as a result to the government shutdown, because basically the equity markets are moving money from equity markets going into the bond markets as a flight to safety. But if we do default, obviously they're not going to have faith and want to put money into something as our mortgage-backed securities, which are basically debt. And if we're going to be late on our payment, and nobody's going to want to go ahead, so that will probably go up. Rates will probably go upwards in that terms. All right, folks. So be cautious. It could be some more volatility while we still have this government shutdown. All right. Thanks a lot for watching. Hope you guys have a wonderful day, and we'll look forward to seeing you guys tomorrow.